Hey everyone, welcome back. Today we're diving into something that I think a lot of us are curious about, sell-offs. Those times when the stock market just seems to completely nosedive.
Yeah.
And you guys sent in a ton of interesting stuff for us to look at. We have like basic definitions of what a sell-off even is, all the way to what triggers these things, how analysts break them down, and even some strategies to help make sure you don't lose everything when it happens.
Right.
So our kind of mission today is to make sure that by the time we're done with this, you don't just know what a sell-off is, but you can actually use this information to do your own investing right.
Definitely. And I think it's something that, kind of freaks people out. Like sell-offs can be pretty scary.
Oh yeah, for sure.
But, once you sort of know how it works, it's kind of like, I guess, learning to drive, right?
Oh,
Once you know how the engine works, it's less intimidating.
totally. So
Mhm.
let's just get right into it. How would you describe a sell-off to, I don't know, someone who's never even thought about the stock market before? What's the easiest way to put it?
The easiest way, well, imagine like a flash sale, but for stocks.
Okay.
So instead of clothes and gadgets, like everyone's trying to get rid of their stocks, right?
Yeah.
And all that selling at the same time, that causes prices to just go way down.
Right, right.
So it's that
Yeah.
high volume of selling. That's the real key. That's what makes a sell-off. It's not just that prices are going down. It's that it's happening fast.
Okay, that makes sense. It's yeah, it's not just a gradual thing. It's everyone's heading for the exits at the same time.
Exactly.
So what would actually set off that stampede? What are some things that could cause a sell-off to start?
Well, honestly, it could be almost anything. You got the classic ones like a company, maybe a big company has a really bad earnings report, and suddenly everyone's worried. Or maybe the Fed does something unexpected with interest rates.
Yeah.
But it could also be something totally random, like a geopolitical event, a natural disaster,
Oh, wow. Okay.
even like a sudden spike in the price of oil, right?
Right.
Like all these things can send these shock waves through the market.
So it's kind of like a chain reaction almost, right?
Yeah.
Something happens, it kicks it off, and then everyone starts selling.
Totally.
Is that where that whole fear is contagious idea comes in?
Oh, absolutely. I mean, think about it, right?
Yeah.
If you see all your friends or your neighbors suddenly selling off all their stock, you might start to think, oh, maybe they know something I don't. Right.
Right.
And then you jump on the bandwagon, even if you don't really know what's going on.
Yeah.
And suddenly it's not really about logic anymore.
Yeah.
It's just like a gut reaction.
Right, right.
People are scared.
Wow. Yeah, I can see how that would get out of control super fast. Okay, so let's say you're an analyst, right? You're watching all this crazy stuff happening. How do you actually figure out what's going on?
Yeah.
I mean, is it just reading the news, or is there more to it than that?
Well, I mean, keeping up with the news is definitely important, but the analysts, like the people who really know what they're doing, they have all these tools and techniques to kind of see through the noise,
Okay.
you know?
I'm imagining them in a dark room with all these charts and graphs everywhere, trying to decipher the code.
Pretty much.
What are some of the things they use?
Well, there's things like moving averages. Have you heard of those?
I think so.
So that's it takes the prices, but it smooths them out over time so you can see the big picture trend better.
Okay.
And then there's the RSI, the Relative Strength Index.
Okay.
That one basically, it tells you how strong the price movements are. So you can kind of try to see if something is overbought or oversold.
Right, right.
And of course, there's always good old-fashioned looking at history,
Yeah.
What happened in past sell-offs?
Yeah.
Are there any patterns?
Right, right. So it's not just using one thing, but looking at a bunch of different things at once.
Exactly.
Okay.
It's like putting together a puzzle. No one piece tells you the whole story.
Makes sense. So we've got, these things that trigger the sell-off, the panic selling starts to happen, and then you've got these analysts trying to make sense of it all. But what if, you're the investor, right? You're in the middle of the storm.
Yeah.
What are some things you can actually do to stay afloat, not lose everything?
That's the million-dollar question, right?
Right.
Well, one of the most important things, and you've probably heard of this before, is diversification.
Right. Don't put all your eggs in one basket.
Exactly. You spread your investments out. So you're not just in stocks.
Sure. Yeah.
You're in bonds, maybe some real estate, maybe even commodities. And you spread it out across different sectors, different parts of the world. So if one area tanks, you're not totally wiped out.
Okay. So if one part of the market goes down, hopefully something else is going up, right?
Exactly, yeah.
Right.
And then there's hedging, which can be a little more complicated. But basically, it's kind of like insurance for your investments.
Okay.
You use these like financial tools, options, or futures contracts to
Hmm.
kind of try to offset any losses you might have.
Oh, interesting. So it's like you pay a little bit to protect yourself from like a really big hit.
Yeah,
Got it. This is all like super helpful. But what about the mental side of it? I feel like even if you've got a diversified portfolio and you've got this hedging strategy, it's still got to be scary to watch your investments go down, right?
absolutely. And that's why staying calm is probably the hardest, but also the most important thing you can do during a sell-off.
Right.
Don't panic and make like impulsive decisions. It's easier said than done, of course. But market fluctuations, they're normal. Sell-offs, they're going to happen. That's just how the market works.
So it's almost like having a plan before you go on a roller coaster.
Hmm.
You know there are going to be ups and downs, but as long as you have that safety harness on, you're good.
I like that.
Yeah.
Yeah, having a strategy and sticking to it, even when things get bumpy, that's key. And that's where staying informed comes in. Keep up with what's happening in the market, what the economy's doing.
Right.
That way you can make smart decisions instead of just reacting emotionally.
Okay. Makes sense. It's like you got to have that balance, right?
Yeah,
You got to understand what's going on, but you also have to be able to control like your own emotions.
exactly. Exactly. And maybe most importantly, remember that this is a long game.
Right.
Sell-offs, they're usually followed by a recovery. So if you sell everything when prices are low, you're basically locking in those losses. And they might have just been temporary.
Okay, so just write it out. Got it. This is all fantastic information. We've covered a lot. Like we know what a sell-off is, what can cause it, and even some things to help us not freak out when it happens.
Right.
But there's one more thing that I want to make sure we touch on before we move on. In your original request, you mentioned tier one traffic and Google leads. And like at first glance, those seem kind of random, but I'm thinking there's got to be a connection there somewhere.
Yeah, there is. It's pretty interesting how it all ties together,
Okay.
like how something like website traffic can be connected to investing strategies. But I guess it makes sense when you think about how global everything is these days.
Right.
So let's start with tier one traffic. Basically, it's just a way of categorizing where people are visiting a website from. And tier one usually means developed countries
Okay.
like, the US, Canada, the UK, places like that.
Okay, I think I'm starting to see where this is going.
Yeah,
So, like, if those tier one countries are like the big economic players, then if their economies are doing well or doing badly, that's going to affect everyone, right?
exactly.
And that could be what triggers like a sell off.
Exactly. It's all connected. And this also ties into Google leads, which are basically like potential customers that a business can get through Google's advertising
Oh,
platforms.
yeah.
So imagine your company selling, I don't know, luxury watches online.
Huh.
You're probably going to want to target your ads to people in tier one countries.
Right, because they have more money to spend.
Exactly.
Okay, so we're talking about like global economics, who's buying stuff online. It's like it's all one big system.
It is. And it just shows how even things that seem totally unrelated can actually have a huge impact on each other.
This is super interesting. Okay, well, we've covered a ton of ground in this first part. We'll be back in a flash to keep going with our deep dive into sell-offs, tier one traffic, and how it all fits together.
Welcome back, everybody. It's amazing how these topics kind of start to connect, isn't it?
Yeah, it really is. We went from like the stock market crashing to talking about digital ad campaigns. It's kind of wild.
It really shows how everything's related. Understanding one thing can help you understand something completely different.
Totally. So, for you listening right now, think about what this means for you. Are you like watching the market, trying to see if a sell-off is coming? Or maybe you're running a business and you're trying to figure out how to reach the right customers.
Exactly. Like maybe you need to focus on those tier one countries we were talking about.
Right, right. It's all about like seeing the bigger picture. All right, so let's go back to sell-offs for a minute. We talked about what causes them, how they happen, and some ways to like protect yourself. But I think there's something else we got to talk about, the like psychology of it all.
Oh, yeah. That's huge. Because, as much as we can look at charts and numbers, it's still people making the decisions, right?
Right.
So fear, greed, following the crowd, all that stuff comes into play.
It's like that thing, someone yells fire in a crowded theater. It doesn't even matter if there's actually a fire. Everyone just freaks out.
Exactly. And that's why it's so important to, have a plan before things get crazy.
Right.
If you've already figured out what your goals are, how much risk you're comfortable with, then you're less likely to do something stupid when the market starts tanking.
So, like, what does a plan actually look like? What can our listener do to get ready?
Well, first, you got to figure out your risk tolerance.
Yeah.
Like how much are you willing to lose? Are you investing for the long term or are you trying to make a quick buck? Once you know that, you can start building a portfolio that like matches your goals.
And that's where that diversification thing comes in, right?
Don't put all your eggs in one basket.
Exactly. Spread it out, stocks, bonds, maybe some real estate.
Exactly. The idea is that if one part of your portfolio is doing bad, hopefully something else is doing good.
Okay, so it's like a safety net. But let's be honest. Even if you're doing everything right, it's still got to be kind of scary, right? Like when you see the numbers going down.
Oh, yeah,
Yeah.
for sure. But that's where perspective comes in.
Yeah.
You got to remember, the market goes up, it goes down. It's normal.
So don't freak out.
Exactly.
Yeah.
Sell-offs, they happen. It's just part of the cycle. If you have a good strategy and you're thinking long-term,
Yeah.
then these little dips shouldn't really matter too much.
So it's like if you're driving on a bumpy road,
Mm-hmm.
you don't want to focus on every little bump. You got to keep your eyes on where you're going.
Exactly. It's about that long-term vision. And honestly, I think that applies to more than just investing.
Yeah.
Like, we're always getting hit with bad news, stuff that makes us anxious.
Right.
But if you can step back, calm down, remember what's important, it's easier to handle.
I like that. Okay, so we've talked about not panicking, having a plan. What about those tools and resources we talked about, like the stuff for Google Leads and all that?
Yeah, yeah. Those can really help, especially when it comes to making smart decisions. Like whether it's using technical indicators, looking at historical data, or those platforms for managing your leads. The more information you have, the better.
So for someone listening who might be like kind of freaking out about all this market stuff, what's the main thing they should take away?
I'd say the main thing is don't be afraid to learn.
Okay.
The more you know about how things work, the better prepared you'll be. Not just during a sell-off, but all the time.
It's like turning that fear into like confidence.
Yeah, exactly.
yeah.
The more you learn, the more control you have. Okay, so remember tier 1 traffic. We were talking about how the economy in those countries can affect like everything. Let's talk more about what that means for businesses.
Okay.
So tier 1 traffic usually means people from developed countries, right?
Yeah.
Places with higher incomes. And for businesses, that's like gold.
Yeah, because those people have more money to spend.
Exactly. So if you're selling something online, you want those people to find you.
Okay, so like if I'm selling, I don't know, fancy organic skincare product, I should be focusing on those tier 1 countries.
Exactly. Because those are the people who are more likely to buy that kind of stuff.
Got it.
And that's where those Google leads come in. Remember, Google Ads lets you target your ads really specifically.
Oh, yeah.
So you can target people based on where they live, what they're interested in, all sorts of things.
It's all about finding the right people at the right time.
Exactly. And that's why understanding tier 1 traffic is so important for businesses. You're not just trying to get anyone to visit your website. You want the people who are actually going to buy something.
Okay. So we know tier 1 traffic is good, especially for businesses selling like higher price stuff. But how do you actually get that traffic? Is it all Google Ads?
Well, Google Ads is definitely a big part of it, but it's not the only thing. There's also SEO,
SEO.
search engine optimization.
Oh, right. That's like making sure your website shows up when people search for stuff, right?
Yeah, exactly. And SEO for tier 1 countries, it can be really competitive. You're basically trying to beat out all the other businesses that are going after the same customers.
So it's like you need to know how SEO works and you need to know what those customers want.
Exactly. And those sources you said, they actually have some really good tips on that, like specific tools and platforms that can help businesses manage their Google leads, streamline their marketing.
It's like a cheat sheet for digital marketing.
Kinda, yeah. Okay, so we've talked about why tier 1 traffic is so important, but what about like the bigger picture? How does tier 1 traffic connect to the global economy?
Yeah. Is there like a link there?
Definitely. It's kind of like a chicken and egg thing. So when the global economy is doing good, people in tier 1 countries have more money to spend.
Right.
They feel good about the future. They're buying stuff, traveling.
So that's good for businesses.
Exactly. More people buying stuff online, more tier 1 traffic. But then what happens when the economy goes bad? Well, people get nervous, right? They start cutting back on spending, especially on like Luxury items, vacations, stuff they don't need.
So those businesses that rely on tier one traffic, they start hurting.
Exactly. It's like a
Wow.
domino
Yeah.
effect. And that's why businesses need to be aware of what's happening in the world, not just with their customers.
Right.
They got to be able to adapt.
This has been like mind-blowing. We started with sell-offs and now we're talking about like the whole global economy and the internet. It's crazy how it all connects.
It is.
Okay, well, we've covered a ton. Let's take a quick break and then we'll come back and wrap it all up. And we're back. Man, this deep dive has been like a whirlwind. We've gone from like the stock market crashing to figuring out how to sell fancy soap online.
I know, right? It's amazing how it all kind of comes together, though.
Yeah, totally.
Okay.
Okay, so let's do like a quick recap for everyone listening, just to make sure we're all on the same page.
Sounds good.
So we started by talking about sell-offs, like those times when everyone's selling their stocks and the market's going down. And we talked about how those things get triggered, like bad news or like just people being scared.
Right, right. And how knowing what to look for can help you not freak out.
Exactly.
Yeah.
And then we talked about having a plan, like an actual strategy for your investments before things go crazy.
Yeah, that's super important. It's like if you know where you're going, you're less likely to get lost.
Right. And then we went on this whole other tangent about digital marketing, like tier one traffic and all that.
And how the economy in those tier one countries can affect everything.
Yeah, like it's all connected.
Yeah.
Okay, so for someone who's been listening this whole time, what's like the one thing they should remember?
Hmm. I think the biggest thing is just to never stop learning. Like the more you know, the better.
Okay.
Whether you're investing in the stock market, running a business, whatever.
Huh.
The more you learn, the more you're in control.
That's a good one. Knowledge is power. Right.
Exactly. But I think it's more than that. It's like curiosity is the key.
Ooh, I like that.
You got to be curious, ask questions, explore. You never know what you'll discover.
And on that note, I think it's time to wrap up this deep dive. We hope you learned something new today.
We did.
And keep exploring.
Definitely. Keep learning.